good afternoon, good evening, and welcome to the IAIS's 2020 ExCo dialogue. This time joining you from the virtual space. I'm sure we were all looking forward to being together in Seattle this week, which unfortunately has not been possible. But the virtual event does bring with it some advantages, and I'm very happy to say that we had 470 people registered for our event today. I see we're looking at around 300 participants have joined us already, and hopefully the rest will be coming in the next couple of minutes. Which actually makes it one of the largest audiences that we've had for an ExCo dialogue. So that's excellent that we're able to reach out to our broader network through this event. So similar to previous years, this really is a great opportunity that comes around once a year for a very direct dialogue and interaction. And a dynamic conversation, really, between our stakeholders and our ExCo panel. It's an opportunity for you to ask the ExCo questions, but also to share your perspectives on topics that are top of mind and of particular concern. It's also, very importantly, an opportunity for us as the IAIS leadership to hear directly from you as well about what is on your mind and what your views are on what the IAIS should be doing. So in preparation for this event today, we sought input from all of you. And you shared your key forward-looking issues and questions that you would like to see addressed. And this is fed directly into our agenda and how we structured the agenda today. So turning to the agenda, you will see that this year's dialogue has a particular focus on COVID-19. Which is quite appropriate, as you can imagine. It's taken up a lot of our time as the ExCo, at the IAIS. So what we've done is structured the agenda into three parts. Part A will be an opportunity for us to update all of you, our key stakeholders, on modifications that we've had to make to our 2020 to 2021 roadmap in light of COVID-19. And it will consist of first of all, a short presentation, and then we'll hand over to questions from stakeholders. Part B will cover questions and perspectives on issues and trends related to or accelerated by COVID-19, such as Fintech or the green recovery. And we look forward to hearing your perspectives on that and sharing with you our thinking to date on those issues. And then lastly, part C is a very important part of the agenda, because this is where we seek your input on our work going forward. So it's an opportunity to obtain input from you on which important issues you believe the IAIS should be focusing on in the future, particularly as we move to developing our 2021 to 2022 roadmap in September this year. So this dialogue is very well timed for that, so that the input we receive today will feed directly into our strategic planning process. Just to share a bit on the format. So in each of these parts, I will invite, first of all, some specific stakeholders to make an intervention or question. And this is based on the inputs and questions that we received prior to the event. Following that, we will try to answer as many questions as we can within the time allocated that come in through the WebEx chat box feature. And we've asked participants to share their questions related to the part that we are covering in the agenda at that time. And we'll address as many as we can as they come in. And this is very important, actually. I really would encourage everybody to add their questions to the chat box or their comments, because one of the great advantages of the virtual format is that we will also be able to keep a record of all the questions and comments on the chat box. So even if you don't get to answer them in today's session, we will have a record, and we will be able to use that as input into our strategic planning and roadmap process in September. A quick housekeeping note. So please be aware that this is a public event and is being recorded. And we will make the recording available on our public IAIS website following the dialogue. And in terms of the running order, so as moderator, I will manage the stakeholder interaction and invite people to ask their questions. And our ExCo chair, who you all know well, Vicky Saporta, will manage the ExCo panel. And I think Vicky will be joining us. Vicky is on the line, I believe. And so with that, very happy to welcome Vicky, and now turn over to Vicky for some brief opening remarks. Thank you.
Thank you, Jonathan. Can colleagues hear me? So, Jonathan.
Yes, we can. Thanks, Vicky.
Okay, fantastic. And welcome everyone to this virtual stakeholder event. It does feel a bit strange having it in my office at my place in North London, which used to be a nursery for my son, rather than in the sunny uplands of Seattle, of a lovely hotel in Seattle, which was the original plan. But as Jonathan said, it does have some advantages, and particularly the inclusion, the possibility of having many more participants, including colleagues and stakeholders that would have normally not been able to travel, and also through the chat technology, the ability for us not only to respond to as many questions as we can, but also to record all the questions and to be able to use them thereafter in the decision making. I would also like to extend my thanks not only to the stakeholders, but also to IAIS members that many of us have joined today. And I would also in particular like to extend my thanks to my panelists today from ExCo, and to introduce them. Many of you will know them and they will not need introductions, but let them do them anyway. First, let me introduce you to my three vice chairs of ExCo, David Altmaier, Commissioner Altmaier from Florida. Then we have Noria Hida, who is with the Japanese Financial Services Authority. And we also have the third vice chair with responsibility for emerging markets, Suzette Vogelsgang, who is, of course, from the Prudential Authority of South Africa. Together on the panel, we also have the chairs of the main parent committees, and I'm glad to introduce to you two new chairs of the parent committees. First of all, Gary Anderson, Commissioner Anderson, with the Massachusetts Division of Insurance, who is our new chair of the Policy Development Committee, replacing Elise Liebers, whom we cherish, but we unfortunately lost. But with Gary, we've got the committee on good hands. And also Dieter Hendrickx, who works for the National Bank of Belgium, and he's a new chair of the Macroprudential Policy Committee, the Macroprudential Committee, and he's replacing Alberto Corrinti, who I'm very glad to say is still on ExCo, but after delivering on the holistic framework, he has handed over to Hendrickx. And finally, of course, Peter Braumüller, who is with the Financial Market Authority of Austria, an ex-chair of ExCo, and for some time now, chair of the Implementation and Assessment Committee. With us, I also have the two champions of two specific topics. Shin, who is with the Monetary Authority of Singapore, and she champions our Fintech agenda. And Jess Summerhays with the Australian Prudential Regulatory Authority, who champions our sustainability and climate risk agenda. And last, but definitely not least, Mike Constantine with the NESC, and Gabriel Bernardino from EIOPA. Thank you all, colleagues, for joining me today, but also to all IAIS ExCo members and members more generally who are with us. Now, the COVID-19 pandemic has created a global public health emergency. The first and most severe consequences that we all care about the most in our societies has got to do with human costs. But there are also economic consequences that we've already felt, and I believe we're going to be feeling for a while. Insurance is an essential service at this time of distress, providing protection against the heightened uncertainties created by the pandemic, and has a critical role in supporting the relaunch of the economy in a post-COVID-19 world. For insurers to play this role and to contribute to the economic recovery, the stability of the sector is vital. To this end, the IAIS has been closely monitoring developments and actively coordinating with other standard-setting bodies, including the FSB, to assess the impact of COVID-19 on the global insurance sector. At the same time, the COVID-19 pandemic has highlighted some profound issues of policyholder protection, including challenges with respect to market conduct and a severe protection gap when it comes to pandemic-related risks. The IAIS has been facilitating the sharing of information and discussion among its broad membership on supervisory responses to the impact of COVID-19, as well as engaging with its stakeholders on these topics. The discussion will help inform and focus IAIS work going forward. While the association engages with stakeholders throughout the year in a variety of formats on the full scope of our work streams, I regard this dialogue as a unique forum for the IAIS and stakeholders to discuss the full range of key issues and work towards potential solutions. The two-way exchange is critical to instilling public confidence in our decision-making process and the quality of our work products. As mentioned by Jonathan, we look forward to answering stakeholder questions on the modifications to our 2020-2021 roadmap activities in light of COVID, including new projects undertaken, because of COVID, and then to provide stakeholders with an opportunity to ask questions to the panel about issues and trends related to or accelerated by COVID. Importantly, and this is very, very important for us all on the IAIS side, under Part C, which is the final part of the agenda, we would like to reach out to you and learn what changes do you see or foresee for the insurance industry in light of the events of 2020. We have an important discussion in September, which we have scheduled for ExCo, precisely to look at these changes and to see how they're going to affect our work plan going forward. So I look forward to covering a lot of this ground today. And with that, with no further ado, let me hand back to Jonathan. Jonathan.
Thank you very much, Vicky. And let's get started with our first session, Part A, which is an update on the IAIS's 2020 to 2021 roadmap in light of COVID-19. So I must say it seems a very long time ago that we last met in person as an executive committee at the end of February, and last had an opportunity to meet many of you in person at the Geneva Association stakeholder event at the end of February, early March. And since then, certainly it's been quite the pivot that we've had to make in terms of our focus as an association. One thing for sure is that we know our members, our member supervisors are facing significant challenges managing the COVID-19 in their individual jurisdictions, and this has been very much reflected in our ExCo discussions, in our adjustments to our roadmap, recognizing that really this is the top priority at the moment. But of course, the IAIS is here to help our members in responding to COVID-19. And really, we've been, I'm glad to say, I feel we've been able to respond quite agilely and flexibly to this change in circumstances. As soon as the crisis started to set in, our executive committee has been meeting every 2 weeks by virtual means to discuss responses to the crisis and really provide a very important global forum for insurance supervisors to exchange their experiences, their insights and their thoughts on the way forward, and to discuss how to adjust the IAIS's work program going forward. So starting with the adjustments to the work program, I think there's certain guiding principles, if you like, that have informed this. And in particular, these are aligned with the FSB principles on response to COVID-19 that they published a month or two ago, and which we as the IAIS welcomed. And amongst these principles in particular, we have been putting a lot of emphasis on providing operational relief, not only to our members, but also insurers, but while at the same time not rolling back the implementation of regulatory reforms or compromising the underlying commitment to the finalization and implementation of key international standards. So in many ways, this may not be a V-shaped recovery. What that means is we do need to continue with our efforts, recognizing that this may be with us for a while and finding ways to move forward our work through through different means, through remote and virtual means. In terms of prioritization of projects, the sort of criteria we've looked at are the relevance of the projects for the IAIS's overall COVID-19 response. In some cases, whether projects are close to completion or already far advanced and can be pushed over the finish line fairly easily. Whether projects or activities contribute to the strategic pivot outlined in our 2020 to 2024 strategic plan. So, for instance, our work on climate risk, that still remains a priority. And lastly, also taking into account the broad interests of the IAIS's diverse membership, with a particular focus on making sure that we continue to add value to our emerging market and developing economy members as well. So there are some areas where we would describe as new areas of work in response to COVID-19. And in particular, this has had two main arms or pillars to it. First of all, our work on COVID-19 risk assessment of the impact of COVID-19, and secondly, information sharing and analysis of supervisory measures in response to COVID-19. So first, on our COVID-19 risk assessment, the most important pivot we've made, I believe, is to rescope our forward-looking risk assessment in the form of our global monitoring exercise, or GME, and refocusing it so that the data collection focuses on the impact of COVID-19. In many ways, I think we were very fortunate to have completed our holistic framework work in a sense just in time for an actual financial stability event. So the GME does provide an ideal platform for us to gather information at a global level on what is a worldwide crisis and allow our members to have informed and collective discussions on what this analysis is telling us and how to hopefully increase resilience in the sector in response to that. So for this unprecedented situation, we have needed relevant data and good cooperation. And I'm very happy to say I think we are well down the track on that. And we've been able to focus this tool on COVID-19 assessment in 2020. The data collection covers both quantitative and qualitative information from both individual insurers and from supervisors on a sector-wide basis. And the first set of data was submitted earlier this month by the 5th of June. And we are in the initial rounds of data analysis. The preliminary findings are mostly based on the qualitative input received from both insurers and supervisors, and a significant part of the quantitative data still needs further completion and validation and analysis before drawing conclusions, but we are making very good progress. Also on the risk assessment side, just to mention, we have also, the Secretariat also regularly prepares a risk dashboard for our ExCo members based on publicly available information that provides a bit more of a real-time, high-frequency assessment of key market indicators of the impact of COVID-19 on the global insurance sector. And this forms part of our bi-weekly discussions. On the second main part, the COVID-19 supervisory and policy measures, in a very short time frame, we have managed to establish a very good information sharing hub for our members on supervisory measures in response to COVID-19. We now have over 100 individual submissions on that, covering a broad range of our membership from developed and emerging jurisdictions. And that's a very useful repository for our members to learn from. At the same time, we've also embarked on the analysis of these supervisory measures. We've undertaken an initial analysis of the measures for ExCo discussion, and we're currently exploring some deeper dive analysis of identified priority topics. Also, what COVID-19 has meant in terms of new or enhanced activities is collaboration with the FSB and other standard setting bodies. So I think it's actually a real testament of the system that in this time of crisis, the FSB, the IAIS, and the other standard setting bodies have really come together and upped the degree of coordination, cooperation, and engagement. So certainly the tempo of engagement with the FSB and the other standard setting bodies has increased significantly, and our work programs are also aligned. In particular, we've coordinated with the FSB on the risk assessment work. So the IAIS engages in the FSB's Standing Committee on the Assessment of Vulnerabilities, the SCAV, in particular to bring an insurance sector perspective to key areas of discussion of financial sector vulnerabilities. We've also engaged with the FSB structures on our analysis of supervisory responses, and both the IAIS and the FSB have managed to move very quickly to collect and compile repositories, databases of supervisory responses, and we are sharing these databases between the respective memberships, which means that our members are really provided with a wealth of information that will help them to analyze responses and see how they can adapt them to local circumstances. And lastly, on stakeholder engagement, we have been working very hard, despite the change in circumstances, to make sure that we maintain our commitment to a high level of stakeholder engagement. If anything, it's more important now than ever, and I'm very happy of the way that the team on the event side and the communication side have managed to pivot so smoothly from what was meant to be in-person meetings to a series of virtual events, starting with obviously this global seminar, but also kicking off planning already for our virtual annual conference in November, and taking lessons from this event and feeding those into our planning. Lastly, just to give a sense of how COVID-19 has also been impacting our existing work program. And in particular, I know we've had questions from stakeholders around the holistic framework and ICS. So starting with the holistic framework, so our global monitoring exercise, in consultation with the FSB, it's been agreed that reporting to the FSB and the public on the outcomes of our regular 2020 GME has been postponed to October 2021, and taking into account the need for operational relief, which means that the data submission deadline for the 2020 GME has been extended to next year. At the same time, we've also begun the process of assessing implementation of the holistic framework supervisory material, kicking off with a baseline assessment, which is assessing where there might be existing gaps in the implementation of these supervisory material. I'm getting a slight echo. Okay, I'm going to continue. There we go. Turning to the ICS, I'd kick off by saying that the current situation, if anything, makes participation by volunteer groups in the monitoring period even more important, as we need to test the adequacy and robustness of ICS as a supervisory tool in times of market stress. So by collecting year-end 2019 data, as well as a stressed balance sheet based on the actual holdings at the end of March this year, we will be able to receive very important information from these volunteer groups that will really be important to the objective of the monitoring period, which is to look at how the ICS behaves under different situations and its usefulness as a supervisory tool, and to make sure that we deliver a sound global standard by the end of the monitoring period. So this is frankly highly significant and relevant information that's going to help with the design of the ICS. But we do recognize the need for operational relief, and that's why the timelines were adjusted. So the timelines were adjusted from with the data submission deadline from the end of August to the end of October on a best effort basis. Since we launched the ICS package earlier this year, there's been a lot of engagement with volunteer groups. So the Capital Solvency and Field Testing Working Group, CSFWG, has increased its engagement, particularly to understand any concerns with the delivery of the information or the timelines. And I think there is, in fact, now a commitment to monthly calls with volunteer groups to make sure we keep up that engagement. For those insurers who are not volunteer groups, there will be a release of the 2020 ICS data collection package and the aggregation method data collection packages later this month. So the public release of the package will be not later this month, will be in July, so in the coming few weeks. And the last element of this on the comparability assessment, again, because of some of the challenges of remote working, we have adjusted timelines for that, and public consultation on the high-level principles for comparability criteria have been postponed now to November 2020, whereas before they were scheduled for July. On a final note, I would like to mention that the adjustments to the roadmap have also been done on a holistic basis, if you like. So whilst we have taken steps to make sure we provide operational relief to our members and insurers, as I said, we are endeavoring to ensure continued progress on key projects like the ICS and the holistic framework, but also on a range of projects that are important to the pivot outlined in our 2020 to 2024 strategic plan. So this means that work on supervisory guidance, our supporting material, our issues papers, our application papers, whilst in many cases we have postponed public consultation dates and planned to extend consultation periods, there are some papers where we are pushing ahead given the strategic importance, and this includes the application paper on supervision of climate risk in the insurance sector, which we still plan to publish for public consultation later this year. The last point to mention before I finish is, as I said, these discussions today are also important for our strategic discussions. And in September, we will start a conversation about the longer-term impact of COVID-19 on the insurance sector, what it will mean for our work program as the IAIS, but also importantly, what it means for how we work and how we adjust to some of the trends around remote working, etc., that might be with us for a while. So I wanted to flag that. So I hope this short presentation has been able to cover some of the questions that we received from stakeholders, but let me hand over to our first planned question, and I would like to invite James Paget on behalf of the Global Federation of Insurance Associations, JFIA, to take the floor for the first question. Over to you, James.
Good afternoon. Thank you, Jonathan. My name is actually Kara Morell, and I will be speaking on behalf of JFIA this afternoon. Thank you for inviting us to speak today. We very much appreciate your update regarding the 2020-2021 roadmap in light of COVID-19. The COVID-19 global pandemic has presented an unprecedented challenge to people, governments, and businesses all over the globe, including the global insurance, reinsurance, and pension industry. A pandemic of this size and scope is not subject to the geographic borders or other limitations that typically exist in the context of an insurable loss. JFIA greatly appreciates the IAIS's statements on insurance and COVID-19, in particular regarding the severe implications of requiring retroactive coverage of losses that are outside the scope of existing insurance contracts and the need for flexibility in data calls and supervisory measures. The IAIS's rapid reactions to those and other concerns have been very helpful in addressing significant challenges facing the industry. We also applaud supervisors for their initiative in developing innovative solutions to enable critical business functions to continue, and hope to work collectively to carry forward such innovations that benefit business and the customers they serve. As governments, businesses, and consumers begin to emerge from the emergency response measures taken to combat the spread of COVID-19, JFIA members remain committed to working with all stakeholders to develop and advance ideas for forward-looking, long-term government-supported solutions to assist businesses affected by government action to address any future pandemic viruses. Any such solutions must, however, recognize the limitations of the capability, capital, and capacity of the insurance sector to assume pandemic risk. In addition, while determining the best path forward around the world are jurisdictional decisions in the remit of local supervisory authorities, government authorities should recognize that global insurance and reinsurance companies must remain able to respond effectively in each jurisdiction in which they do business. Approaches should also remain flexible so that they can incorporate knowledge gained as data from the COVID-19 pandemic becomes available and can be analyzed. In addition to addressing issues arising out of COVID-19, JFIA's members also welcome the opportunity to continue to engage with the IAIS on other priority issues set forth in the 2020-2021 public roadmap. JFIA has an active climate change workstream that is focused on three areas: adaptation and mitigation, protection gap issues, and the role of insurance in supporting sustainability. JFIA is also focused on cyber insurance and resilience, as well as technological innovation. In addition, JFIA supports continuations of the 2019 G20 work programs on financial inclusion and aging society, and we would also highlight the central role that life insurance and pension providers play as natural long-term investors in assets such as infrastructure, which will be central to economic stimulus. A number of JFIA members have been invited to elaborate on these issues later in the discussion. JFIA and its members look forward to a continued dialogue with respect to all of these issues. I will reserve our question on pandemic risk for Part B of the discussion, but my question now is, could you provide some additional detail on how COVID-19 has impacted work on IAIS work streams such as on the global monitoring exercise, as well as any other information gathering activities the IAIS is currently carrying out? How will the information gathered shape the work plan going forward? Thank you very much.
Thank you very much, Cara. Let me hand the question to that you've asked to the parent committee chairs. You started with the GME, so let me start with Dieter. Dieter.
Thank you, Vicky. I hope everybody can hear me loud and clear. Now, on the GME, I think Jonathan covered already quite a few interesting aspects there. I think as soon as we noticed at the level of the IAIS that the COVID-19 pandemic would have a certain magnitude and extent in terms of duration, we decided to ask ourselves the question, what would be most useful in terms of way forward for the GME this year? Trying to find a balance, I would say, between on the one hand, the operational burden that we would put on the participants of the GME, and on the other hand, the need for us as IAIS to understand as a community of supervisors what the impact of COVID-19 could be on the global insurance sector. And I think, as Jonathan said, I'm very happy to see that we were able to pivot quite smoothly from a normal systemic risk analysis to one which is really targeted to trying to understand this impact of COVID-19. What we try to do is therefore to set up a reduced data collection package, both for the individual insurance groups that participate, but also for the jurisdictions, for the authorities that participate in the sector-wide monitoring. And the goal of this more targeted data collection was really to try to understand the impact of COVID-19 on elements such as the profitability of insurance companies, the solvency, the liquidity, and the balance sheet in general, so assets and liabilities. The end goal here is for us to try to understand whether we should be worried about the impact of COVID-19 on the insurance sector, and whether we see any risks which are important enough to be addressed. I think alongside to that, as also announced by Jonathan, we have decided to postpone the data collection, the general data collection of the usual GME, let us say, from end 2019 to next year. I think that is also important to realize that we didn't want to cancel this data collection because it's important in view of our commitment to the FSB to do not stop this general systemic risk analysis and to not roll back any of the important reforms we introduced through the implementation of the holistic framework. Additionally, I do believe that by, for instance, comparing the data of end of 2019 with the future data of end of 2020, that we may gain some very useful insights also in our general systemic risk analysis. Additionally, also the COVID-19 data collection may help us to gain some additional insight in terms of what should be changed in the data collection, in the general GME data collection. So to this extent, I hope that some of the elements that we have introduced in the COVID-19 data collection will also find their way back to the general GME exercise. As to what the end product may be, I think we are still reflecting, we're still analyzing a lot of data. I hope that in the end we can give you all a comprehensive overview of what IAIS feels are the main impacts of the COVID-19 crisis on the global insurance sector. I think I can stop here. I'm happy to ask any further detailed questions if there are any. Thank you.
Thank you very much, Dieter. Let me pass now to Gary. Gary Anderson, anything to add?
Yeah, thank you, Vicky. Just to confirm, you can hear me?
I can, loud and clear.
Great, thank you, and thanks, Cara, for the questions to me and Dieter. I will attempt to stay in my PDC lane and focus on updates related to ComFrame and the ICS, and thank Dieter for the updates that he's provided. I'd also be remiss if I didn't say thanks to Elise, who is my predecessor, and the work that she did on the PDC, and having been a colleague of hers for a number of years, I know the amount of commitment and work that she put into it, so I wanted to thank her. As Jonathan noted at the outset, I think a couple of key considerations to remember as we have worked over the last several months to address our 2021 roadmap are some key considerations, and those are kind of the relevance. He noted this, the relevance of projects for the ICS's overall COVID-19 response, which I think is really important to keep in mind because of the resources that have been necessary for each of us as supervisors and as carriers across the globe to address the pandemic. So I'll jump into a few of the updates. COVID-19 has certainly served to highlight the importance of supervisory coordination. ComFrame and the agreement on ICS version 2.0 for the monitoring period do provide more tools in the supervisory toolkit to take a coordinated approach to group supervision. And I would say in particular, ComFrame provides a framework for both assessing and coordinating cross-border supervisory response at a level of the insurance group. One of the objectives of ComFrame, that is the efficient supervisory cooperation for the supervision of IAIGs, which is important in particular time of crisis. ComFrame does provide a platform for this with both qualitative and quantitative aspects. Implementation of ComFrame should lead to increased understanding and confidence in cross-border analysis of IAIGs among group-wide and host supervisors, as well as contribute to cross-sectoral dialogue. And as was communicated in the explanatory note published in November of 2019, the IAIS's initial focus would be on supporting members' efforts in the implementation of ComFrame, mainly by organizing training and workshops for supervisors. But because of the outbreak, organization of trainings and workshops have been postponed. So facilitating the implementation of ComFrame will first concentrate on the identification of IAIGs and the compilation of the public register of IAIGs. After the initial stage of ComFrame implementation, the IAIS will then shift its focus to the assessment of implementation of ComFrame. The assessment methodology for ComFrame was adopted in November 2019 as part of the overall framework, and the IAIS will further discuss details of the timing and the form of the implementation assessment during 2020. With regard to the public disclosure of IAIG, earlier this year, group-wide supervisors identified IAIGs based on international activity and size criteria provided in ComFrame. Group-wide supervisors committed to publicly disclose the identification of IAIGs at the earliest possible opportunity, noting that we did recognize that in some cases this disclosure may require some legislative changes or regulatory action. At the beginning of July, the IAIS will publish the public register of the IAIGs that have been publicly disclosed by their group-wide supervisors. I would say also with regard to the monitoring period, again, the outbreak of COVID-19 has delayed the due date for the monitoring period data collection. The current situation does demonstrate the importance of supervisory tools in times of market movements and stress. Prior to the launch of the 2020 ICS confidential reporting data collection on the 23rd of April, at ExCo, we agreed to adjust the timeline for 2020 ICS confidential reporting in response to the crisis. The submission deadline was extended to the 31st of October to provide operational relief to participating volunteer groups. And as we know, similar adjustments were made to the timeline for the aggregation method data collection that is being supported by the IAIS. And since the launch, the Capital Solvency and Field Testing Working Group has increased its engagement with volunteer groups, as Jonathan noted earlier, to stay informed of any concerns the volunteer groups may have with the exercise, including information to be reported and the timeline. I'd also note that the CSFWG hosted a call on the 6th of May in order to seek feedback from volunteer groups on how the IAIS can provide support during the monitoring period. And on June 10th, CSFWG hosted a virtual workshop with volunteer groups to discuss reporting requirements for this year's exercise. This was, of course, in lieu of the workshops that would normally have been held to launch. So increased engagement with volunteer groups will continue during the reporting period, with monthly calls scheduled in July, August, and September. As part of the ICS data collection, a stress balance sheet is being collected in order to assess how The ICS reacts under changing economic situations. This year's stress balance sheet is intended to proxy the impact of COVID-19 crisis on insurers' balance sheets. Volunteer groups have been asked to simulate the impact of COVID-19 on the insurance part of their balance sheet by using market data as of the 31st of March 2020. For next year's reporting, the stress scenario will be refined to more appropriately capture the impact of the crisis. So while the first year of the monitoring period may not be what anyone had in mind for certain, the information received will help inform our ongoing work to help deliver on important milestones. With respect to assessing comparability of the aggregation method to the ICS, as noted in the 27th of March IAIS press release, the work plan for development of high-level principles to inform the development of the assessment criteria has been adjusted, as Jonathan also noted, to reschedule the consultation previously planned for July 2020 to later this year. I just say thank you to the Jonathan and the Secretary of Staff for organizing this, putting it together. With that, Vicky, I would turn it over to you.
Thank you very much, Gary, for this update. And Peter Braumüller, Chair of the Implementation Assessment Committee, anything to add?
Thank you, Madam Chair. Thank you, Vicky. Can you hear me?
Loud and clear.
Yeah, thank you very much. I try to be very brief and focus only, pick 3 points out of our very large agenda we have to follow. I think the first one I want to talk is about the holistic framework impact assessment, because this is a major part of our work, since we need to prove credibility of what we have just developed over many years with hard work, and now we need also to prove that this is implemented and is really has found its way into the practice. So we have now launched the baseline assessment earlier this month, and we had to extend the deadline for responses from supervisors to the 1st of September. So this is only a slight delay. We still try to keep on track, which means to come back with preliminary results to ExCo in November, and then to have the final report to be submitted to ExCo in the FSB in March next year. And over the summer, we will do further work on the next phase, which you know is the targeted jurisdictional assessments. So we are already preparing for that because time is running fast. Second topic I want to pick up is one element of our development of supervisory material, because Kara referred to the climate agenda. And here I want to say that our application paper on climate risk in the insurance sector stays on track more or less. So because it has been identified as a top strategic priority of the IAIS, and we try to keep to the original timetable as best as we can. We will only have probably a slight delay at the start of the public consultation, which will now be most probably September instead of early July. But we put a lot of focus and emphasis on this project. And finally, let me say a word, because crisis is always very difficult, particularly for our members from the EMDs, emerging market developing economies. And I have to say that we managed together with our implementation partners, particularly the A2I, the FSI, and the Toronto Center, to both shift from, in an organizational perspective, to shift to virtual meetings, which was sometimes not so easy because it's things that were planned to be in-person meetings, but that was done very successfully. And also from a content perspective, all of them together with us, they tried really to focus on what is important for emerging market supervisors right now, how to manage the crisis, what is most important to do in this unprecedented situation. That concludes my remarks. Vicky, thank you.
Thank you. Jonathan, back to you.
And thank you, Vicky. So I think we are going to have to move along at this point so that we don't run out of time, and move on to part B of the session, which gives us an opportunity to cover questions and perspectives from stakeholders on issues and trends related to or accelerated by COVID-19. And we'll kick off on the topic of pandemic risk. And we have a two-part intervention here. First of all, from the Association of Bermudan Insurers and Reinsurers, ABIR, related to what may or may not be insurable in these uncertain times, such as pandemic risk. And I will ask John Huff to take the floor, and then there will be a follow-on question from Cara Morell from Jafia as well. So first of all, over to you, John, and good to see you again.
Are safe and healthy. I hope everyone is safe and healthy during this global pandemic. So as you know, Bermuda is a leading insurer and reinsurer, particularly in the natural catastrophe space, with about 35% of the market. And there has been much discussion on the future pandemic coverage and how that may be structured. Very good discussions by a lot of groups, including regulators. And a real concern that was referenced earlier by our JIFIA speaker about the correlation of these risks and how that makes that more complicated. There is no geographic limitation on a pandemic, which may lend itself more to a public-private partnership concept with more government intervention. Unfortunately, that has also kickstarted some discussions of a laundry list, if you will, of products that some think are not insurable at all, and particularly in areas where we already have some robust markets growing. So whether that be cyber or climate, even flood. And so regulators through the IAIS have heard a great deal about the benefits of risk transfer. You've heard from the Coalition for Reinsurance Education that talks about risk spreading. So, but my real question is, post-COVID-19, in this rewriting, if you will, of pandemic coverage going forward, two-part question: is the industry at this point in the midst of change in terms of risk appetite? And if so, are the regulators and supervisors concerned how this may impact affordability and accessibility of coverage to consumers?
Thank you, John. And let me now turn to Cara.
Thank you very much. My question is related to John's. If you could please provide some additional information on how the IAIS views pandemic risk coverage and specifically the role of the insurance industry in addressing it. Thank you.
Yeah, very interesting questions. Gabriel Bernardino, would you like to respond, please?
Yes, Vicky, do you hear me?
Loud and clear.
Very good. I'm happy because I was having some problems, so very happy to join the discussion. Now, this is, of course, a very important point, both what John mentioned and Cara also, and just to make a couple of references to what the IAIS already communicated and the kind of logic that we had in relation to the pandemic coverage in these cases. And I think we were very clear that, of course, when the policies covered the risks related to pandemia, of course that it's expected that the sector pays the claims promptly and efficient manner. And I think it's a question of trust and confidence by the market, by the consumers, and I think it's very important that in a time of a crisis, also from a reputational perspective. But I think we were quite clear also since the beginning, cautioning against any kind of initiatives that will require retroactive coverage and then to pay losses that were not included, that they were actually excluded from the policies. We know that there are some situations where, of course, this is subject to interpretations. We know that there is, of course, litigation, which is also unfortunate. But I think we were very clear from a supervisory perspective that, if there's no premium, if there's exclusion, if there's no provision from a solvency perspective, and also from a policyholder perspective, I must say, this situation of having retroactive coverage is definitely not a good idea. Now, this created, of course, what we usually talk about, the issue of protection gaps, and this highlighted, of course, this crisis, the limits and the types of coverage that this sector can also bring to the table. And I think, as John mentioned it, and I think we agree with that, this is a situation where probably the elements of mutualization, pooling, diversification that are the traditional elements of the insurance sector are difficult to achieve entirely. And so what we said from the IAIS perspective is that we encourage the efforts to try to seek potential solutions to protect the businesses, individuals on these types of risks. And as it was mentioned, and I think that this makes a lot of sense. This is an area where there needs to be some combination of public and private elements to have a better coverage of this, and to try to contribute to have higher resilience in our societies in relation to this. Now, to the question, what should be the level of involvement of the sector in these potential solutions? I think we all know that discussions are evolving both at national level, but also in Europe, for example, that at the level of EIOPA. At the EIS, we have not discussed it yet in detail what could or should be the role of insurers. So in this, I can give you a little bit my view in terms of elements that are relevant in this discussion. I think that insurers should be part of the solution. I think pooling would make sense, but of course there are elements in terms of the potential accumulation of risk, and also, let's be honest, the capacity of the sector to deal with events of this nature and this dimension. The way that I see it is that this needs to be really with a public-private partnership there, and with the limitation of the coverage that the sector has. That can be also, thought through other types of solutions, like, putting some of this risk on capital markets to increase capacity. We have seen it in other areas, but definitely, I think that this should be the kind of basis for a solution. I think it's also very important to include, a quite bulletproof risk definition. So, what are we talking about in terms of what are the claims that will be paid? The coverage needs to be quite, I would say, meaningful, but also affordable at the end of the day. And I wouldn't like to finalize also without mentioning the element of risk prevention and risk mitigation that needs to be included within, I think, this framework. Risk mitigation and prevention by the businesses themselves, but also by the governments, because this can also limit, of course, the nature of this risk. On the other side, it's clear that insurers can also be part of a solution, not only by having some skin in the game, but also by, using the infrastructure that exists already there, with the underwriting capacity, with the claims capacity. So that makes a lot of sense that the industry is part of this. So, I think just finally on the point from John on the, what does this mean for other types of risks? I think that there is an issue really about resilience of our societies related to systemic risks or risks that are more on the tail side. And of course, systemic cyber, now what we see now with the pandemic, but also natural catastrophes, there are clear protection gaps around the world in relation to this. And I think we believe, and that's why we put this also as a priority, strategic priority from the IAS side. We believe that the insurance sector, is not a silver bullet for all of this, but it can be really part of the solutions. And we can, as a society, use much better the capacity, the knowledge, and the experience of the insurance sector to deal with these risks from a societal perspective. So at least I think that that is a discussion that was already, I would say, in the pipeline from a strategic perspective. But I believe that the situation with COVID-19 brought it much more to the table. And I think that we should look at this as an opportunity. And when I say we, I think both regulators, governments, but definitely also the sector. I think we should look at this as an opportunity, and it should be a shame if we cannot, on top of dealing now with the specific situation of the non-damage business interruption, because that is the area, of course, there's more complexity right now of the pandemic. It will be a shame if we don't take this as a lesson and a warning that let's be prepared better for the future in things like climate impacts on natural catastrophes and things like that, and that we will not surprise, a couple of years later on the road with a similar situation of a clear resilience gap in our societies.
Thank you very much, Gabriel, and I would certainly echo those comments. And as you will, many of you will know from the press release that we released at the end of March, the IAIS certainly encourages efforts seeking potential solutions to protect businesses and individuals against these pandemic risks. And stands ready to help facilitate these discussions at an international level. And certainly, whilst many of these issues are policy issues with a capital P, if you like, sort of government policy issues, I think certainly the IAIS has a role to bring an insurance supervisory perspective to some of these discussions. And I think we are looking to kick off that work with at least starting with a bit of a stock take of the various initiatives that are under discussion in different parts of the world, and looking at some of the key differences and key issues that might have a supervisory angle to them as well over the coming few months. And we certainly look forward to engaging with stakeholders along the way as we do that work, because it certainly, I think, requires a collaborative effort and a coordination at looking at these issues. But with that, in the interest of time, we have to move on to our next interesting topic, which is around Fintech. And we certainly know that amongst the trends that COVID-19 has accelerated, certainly the shift to digitalization is key amongst those, and what was already accelerating has accelerated even faster, if you like. So let's now shift the conversation to the impact on consumers of greater digitalization and big data analytics. And I would like to give the floor to Bernie Birnbaum from the Center for Economic Justice to ask a question on this.
Thank you, Jonathan. Are folks hearing me?
Yes, very well. Thanks, Bernie.
Wonderful. Thanks again for the opportunity to participate. While insurers have been moving to greater digitalization and big data analytics in all aspects of insurer operations, sales, pricing, claim settlement, anti-fraud, the pandemic has accelerated this transition. For example, by one estimate, the percentage of digital motor vehicle insurance claim settlements in the U.S. grew from 20% to 60% of all claims in 2 months or less. The rapid deployment of digital interactions by insurers has highlighted 2 areas where supervisory modernization is needed for consumer protection: algorithmic bias and dark patterns. While the benefits of digitalization, big data analytics, and AI in insurance have been identified, so have the dangers of these new data sources, algorithms, and digital interfaces. The most important issue is algorithmic bias against protected classes, which is also referred to as disparate impact or proxy discrimination. The murder of George Floyd in the U.S. has prompted protests around the world against systemic racism and inherent bias throughout society. Insurance company CEOs quickly made statements describing their commitment to eradicating this inherent bias and systemic racism. So there are 2 types of unfair discrimination against minorities and other protected classes: intentional discrimination and discriminatory effect. Disparate impact or proxy discrimination refers to practices that have the same effect as discriminating on the basis of protected classes. So when you read that Google and IBM have stopped offering their facial recognition technology and that jurisdictions across the U.S. have stopped using facial recognition technology, what you're seeing is a recognition that these technologies reflect and perpetuate historic discrimination. They are forms of proxy discrimination. To address inherent bias and systemic racism in insurance, you have to recognize that proxy discrimination is in fact unfair discrimination and make explicit the recognition, the requirement for supervisors and insurers to identify and minimize such proxy discrimination and algorithmic bias. The next consumer protection issue related to digitalization is called dark patterns. And that refers to digital designs created to make users do things they might not want to do or hide choices the business might not want the consumer to make. The issue becomes more prominent as insurers move from paper-based applications and disclosures to digital ones. Supervisory best practices and consumer protections for paper-based applications, information, and disclosure are not sufficient or necessarily suited to digital interactions. So action is needed by supervisors to develop the skills to recognize dark patterns in insurance and stop unfair and deceptive digital interactions. So our question, what actions is the IAIS taking to establish standards to develop supervisory tools and resources to address these consumer protection issues related to rapid digitalization, particularly with regard to principles for insurers' use of big data analytics and AI, and guidance to identify and avoid proxy discrimination against protected classes? Have the activities of the Market Conduct Working Group been prioritized or de-emphasized? What actions can the IAIS point to as evidence of the same commitment to consumer priorities as to insurer priorities? Thank you very much.
Thank you, Bernie. I'll hand over to Hern Shin Ho from the Monetary Authority of Singapore, who's also champions our work on digitalization and fintech. Hern Shin?
Thank you, Vicky. And thank you, Bernie, for your questions. They are very pertinent. I would first take a step back to say that digitalization within the insurance industry is not new. And as you have noted as well, it's only been accelerated, by the COVID situation, as insurers need to ensure continued delivery of services to their customers and their policy holders. They have leveraged at a far greater pace on digital customer journeys to ensure that high quality services to customers continue uninterrupted. In the specific areas that you have raised regarding algorithmic bias, this again is not a new area. Many supervisors around the world have already been tackling this area in the past few years, given technology, the ability to garner vast amounts of data and to process them with increasing speed and efficiency, and to sort of garner customer insights as a means to be more targeted in marketing, as a means to identify consumer needs. Those benefits have, of course, as you have noted as well, come along with also increased risk of, for example, inherently biased data or algorithms that's not been put together in a manner that would treat all consumer groups fairly. I think the approach of various supervisors around the world has been to first start by drawing a bright line in the sand to say that discrimination, or rather explainability and fairness of these algorithms and data is essential. And this is also not something new, because fairness and explainability has already been a hallmark of our supervisory focus even before the emergence of big data and data analytics and AI algorithms. And so in this area, I think several supervisors have already started issuing principle-based guidance. So whether you're talking about the guidance issued by MES, NAIC, the French regulators recently issued a consultation. The Netherlands as well has issued a set of principles to guide responsible use of AI. And all these, whether they're principle-based or slightly more prescriptive, have common features that require explainability, accountability, especially when AI is used for decision making. And I think the progress in the next stage is really how would you implement this well. And I think some supervisors have also made progress in this area. For example, the UK FCA, and maybe Vicky can add on later, has already started, investigating the use of algorithms in general insurance pricing. And they have noticed that the use of sophisticated algorithms have allowed some insurers to see which customers are less price elastic. And some of these customers, and including vulnerable groups, have then been subject to premiums that are multiples of the average premium that other customers pay. And I think supervisory action, is being taken in that area. So I think the benefit of IAIS, okay, maybe I take a step back. Supervisors are all at different phases in terms of digitalization policies, and insurers around the world as well are at different phases. In the more emerging economies, they have quite a different problem, right? They have issues such as, e-signatures are not being recognized. They cannot contract digitally, and therefore, in a period like COVID, you have access to insurance issues. Supervisors need to deal with that to ensure that our regulations do not prohibit insurers from serving their customers well using digital channels. And this is increasingly important in the COVID world and maybe even post-COVID world, when you get subsequent waves of infection, customers preferring to deal online. We need to make sure that insurers have the capability and are not prohibited by law to transact digitally. But of course, in the more advanced economies, you have adoption of AI and those principles and those algorithms, which comes with it some of the issues that both you and I have mentioned. And in this area, again, the IAIS, being a gathering of international supervisors, we have the advantage of being able to share experiences, voices, good practices of supervisors around the world. And we also have the ability to, issue issues paper, which we have, as you have seen on digitalization in the insurance sector. That issues paper was issued in 2018. We've also issued another application paper on big data analytics earlier this year. Again, to highlight some of the pitfalls of big data analytics. So we hope to continue to leverage on our collective expertise within the membership, using forums such as our Fintech forum to highlight issues, and at the appropriate juncture, share useful best practices, whether it be through quick info notes or in the version of application paper. So that's something very much close to our hearts as well. And that work will continue, and we hope to work with other standard setting bodies, as well as consumer advocates, data scientists, as we continue to advance work in this area. A very important area, and that will be quite a priority area for us in the coming year. In the area of dark patterns, I think maybe a bit less work has been done in this area, and we will really need to ramp up work and maybe my colleagues more familiar with the consumer protection area may want to say something. But essentially, dark patterns really make use or try to exploit our cognitive biases through clever design of user interface to trick consumers into deprioritizing certain decisions or certain options that they have in the when transacting with insurers. And one of the areas that is really useful for us to consider is whether we can make use of behavioral science to better understand how consumers respond given their cognitive biases. So, for example, one area was, is the option of an opt-out of a service as benign as it seems, because consumers seem to have the choice. You can opt out if you don't want the service. But if you go into the world of behavioral economics and behavioral science, they will tell you that consumers, when inundated with information, would try to deprioritize things that seem less important, and this sort of opt-out buttons could be deprioritized. And so I think work needs to be done together with behavioral science experts to figure out how consumers actually respond given their cognitive biases, and therefore what guidance might need to be given to insurers as they transact more and more with customers online. We have seen quite a bit of abuses in the, commercial, fast-moving goods world. A little bit less in the insurance and financial services space, maybe because it's a more regulated space. But clearly, it's an area that we will need to pay more attention to in the road ahead. The other strategy, of course, is in consumer education. If customers are more aware of their own cognitive biases, they would then, and also, how websites might make use of these cognitive biases to exploit them and to maybe deal to them a less than fair deal, it will help as well in that situation. So these are areas of work that we hope to do more work in the coming year. And again, we very much would appreciate the partnerships with other standard-setting bodies, because this is not a pure insurance issue. We also appreciate the partnership of academics, consumer advocates as we progress our work in this area. I'll hand it over back to you, Vicky. Thank you.
Thanks, Shin. Mike Constantine, your perspective on this issue?
Thank you, Vicky, and good morning, Bernie. I think Hern Shin did a fantastic job of covering a lot of these questions that you raised, which, as I think we all would agree, are certainly important and timely given both the dynamics of a global pandemic and increasingly this global discussion we're having around race and diversity in insurance, hugely important topics. And I guess I would just at a super high level would make two observations building off of Hern Shin's comments and those of Jonathan and Vicky earlier, which is, for the IAIS, it is a membership who by and large have an obligation, a responsibility to protect consumers from discriminatory practices in the insurance sector. It's a responsibility that I know the membership takes extraordinarily seriously. And, we have shown that commitment over time in different jurisdictions in different ways. But certainly, with everything that's happening, both with the dynamics of pandemic and around the questions of social injustice, these are issues that are being accelerated for discussion within the IAIS and ultimately, I hope, action within our respective jurisdictions. And the IAIS, reflects the priorities of its membership. And I think both of these are areas where there already is a sort of a prioritization, but that is accelerating by virtue of recent events. We had already started it, as I think Jonathan alluded to, in the current strategic plan, made more of a pivot to some of these consumer-facing issues. We certainly support that pivot and believe it needs to accelerate. And again, I think that will be driven by how you see it prioritized in individual jurisdictions, certainly here in the U.S. I think you can expect to see an increasing focus on these issues starting in the very near future. And I know my colleagues in Europe, Asia, South America, and otherwise are embarking upon and have already embarked upon their own forays into this area. So I fully support the comments you've made in the areas that you've identified as being important to all of us. And again, as I noted, there is, I think, a feeling of absolute responsibility by IAIS members that we should take these on. And there is no organization better suited, particularly for purposes of sharing best practices, what we're doing in the policy areas than the IAIS. And I know we all look forward to forthcoming discussions around these. So with that, Vicky, I'll certainly happy to turn it back to you so we can maybe gain a little time here.
Thanks, Jonathan. Back to you.
Thank you, and thanks very much, Shin and Mike, for those very good answers. And certainly I can echo the IAIS's commitment to work on market conduct issues in the period ahead. But let's now shift to another very important issue, which is sustainability. And this is a key strategic theme in our 2020 to 2024 strategic plan. And we have committed to continuing this important work, working with our various stakeholders and partners. Clearly this is a key moment on these issues as well, because the scale and the nature of the economic policy decisions being made now with a view to economic recovery could affect climate outcomes far into the future. So it's a key moment, and let's kick it off with a question from Stuart Wason of the International Actuarial Association, the IIA, on a question on green recovery. And over to you, please, Stuart.
Yes. Can everyone hear me?
Yes, very well. Thank you, Stuart.
Excellent. Very good. Well, thanks very much, Jonathan, and also to Vicky as well for this opportunity to participate in this important conversation about the impacts of COVID-19 on behalf of the IAA. The International Actuarial Association, of course, is the worldwide association of professional actuarial associations representing approximately 70,000 actuaries in more than 115 countries, with 7 special interest sections for individual actuaries. The IA has been actively involved with its member actuarial associations in studying the COVID-19 pandemic and its multitude of impacts. The COVID-19 pandemic and its accompanying impact on social and economic activities around the globe, as we noted, is unprecedented. Its impacts will likely take months to emerge. This pandemic is providing ample illustration of the deep levels of connectivity and global human activity. But recognizing the global push to focus on environmental, social, and governance issues, the IAA is focusing its work on these topics and has the following question for the IIS. Does the IIS have any thoughts on how recovery from this current crisis can be used to promote a sustainable future?
Thank you very much, Stuart, and for your participation. Let me hand over this question to Jeff Summerhay from APRA, but importantly, the champion on the IAIS on sustainability. Jeff, please.
Thanks, Vicky, and thank you, Stuart, for your question. And can I also say thank you to the IAA for its active and ongoing engagement with the IAIS and the Sustainable Insurance Forum on the sustainability agenda. We appreciate your contributions to the various pieces of work that we've put out. So, Jonathan, alluded to a pivotal time in history and recover from the pandemic. That investment is made, and already we're seeing examples of governments globally linking recovery packages and stimulus packages to sustainability agendas. That is very present in Europe. Stuart, as you know, there is also initiatives to that effect in Canada, in my part of the world. New Zealand is an example as well, and no doubt there are many more. And of course, that has been done because there is no escaping the cost of climate change in particular. The only choice we have as a global community is how, where and when that cost emerges, and whether it emerges as physical risk or transition risks. But of course, linking economic stimulus packages to sustainability initiatives are matters for governments, not matters for regulators. But we as regulators are looking on that with great interest. Our area of just briefly on what we are doing on the climate agenda, which is an area which I think as a standard setter we have led and appropriately so as the insurance sector. You'd be aware at this event 2 years ago at a global seminar in Moscow 2 years ago, we were the first standard setting body to release an issues paper on climate change. That particular paper focused on this year. We published a second paper which dealt with the TCFD's recommendations by the insurance sector. And certainly while there is a lot of progress by the large, more sophisticated firms, it showed that insurance firms more broadly, of which there are many, there is still much work to do, and that was a bit of a wake-up call, not only for firms, but for the supervisors of those firms. We've brought those two pieces of work together in an applications paper, which has been referred to by a number of my colleagues on the call tonight, and that will be out for consultation in September. We had a really excellent stakeholder engagement session with 325 stakeholders 2 weeks ago on the themes of that paper, where we are linking the ICPs, 5 ICPs, those around the supervisor's role and reporting, corporate governance, risk management, investment and disclosure. We're linking those ICPs back to the supervision of climate risk to enable our members to advance and where appropriate minimise those risks in the firms that we supervise. So our focus to date has been very much on climate. It's an incredibly important topic. It links many other sustainability topics together. But I would flag, Stuart, that there is an emerging interest by our membership and more broadly on the broader biodiversity agenda. And I can speak on behalf of the Sustainable Insurance Forum, where we have recently conducted a planning session for our work into 2021 and beyond, where these topics were an area of great interest to our member supervisors. But thank you for your question. I hope I have answered that adequately, and we look forward to the ongoing engagement with your association in our work. Back to you, Vicky.
Back to you, Jonathan, and I'm a little bit conscious of the time. We're running behind.
Yes, thanks, Vicky. I think we will have to move straight to part C of the agenda and looking to input on our work planning going forward. And I don't know whether you want to make any, just some introductory comments.
Just to be very brief on this, as I mentioned, to just leave time for questions and answers. As I mentioned earlier, we are going to be taking stock about what COVID-19 does mean for our work plan and for our priorities. As you have already heard, there are certain priorities in our strategic plan that very much remain as priorities. For example, conduct issues around technology, which Hern, Shin, and Mike covered so thoroughly, but also the agenda on climate risks, clearly implementation work on a standard setting will remain important. But the question is what that I'd like to ask you. We all very, very keen to hear from you. What do you think should be, what is your input in what we should be prioritizing going forward? And particularly given the lessons we've learned about supervisory policy issues around the insurance business sector in particular, what has COVID and the new world and the new normal will mean about the insurance business, and that supervisors need to be particularly alert to. So with that, I'll leave it to Jonathan to moderate. Thanks very much,
Perfect.
And I really look forward to the discussion.
Perfect. Thanks, Vicky. And let's jump straight in, given the time. We have three participants who've indicated input beforehand, and I'll call on each of them in turn. Given the time, I'll have to ask everyone to keep their comments quite succinct. But let's kick off first with Mr. Yuta Saito on behalf of the General Insurance Association of Japan. Please take the floor.
Okay, hello. Can everybody hear me okay?
Yes, thank you very much.
Thank you. Good evening, good afternoon. Good morning to everyone. My name is Yuta Saito from IAIS Insurance Company, representing the General Insurance Association of Japan. We want to thank the IAIS so much for giving us a chance to comment in this ExCo dialogue. As for your question, we believe that the urgent issue at this moment in the insurance industry is obviously various changes in operations required in light of COVID-19. For example, web conferences as well as remote work from home could pose a risk from the viewpoint of cyber security. Insurance companies will need to enhance their own cyber resilience as well as to strengthen their own work on distribution of cyber insurances as well. Also, some jurisdictions which previously depended mostly on face-to-face contract procedures as well as claims processes will face the challenge of adapting to digitalized remote operations as well. Considering the context of these changes, we feel that cyber and digitalization, such as Fintech, are the areas which IAIS should focus on over other issues. Last year, there was a questionnaire conducted in a global seminar in Buenos Aires that asked what new areas the IAIS should focus on. If I remember correctly, Fintech won the most votes, and cyber came to the second. We believe that in these areas, even in the light of COVID-19, there's a great deal of interest from the industry. We understand that the IAIS has been working on and published supervisory materials in the past, such as an application paper on cybersecurity, as well as those on digitalization. We hope that the IAIS will further work on these areas to share best practices, while also taking into account different characteristics among jurisdictions in order to contribute to consumer protection and sound development of the insurance industry. Thank you.
Thank you very much. And I think we will move straight on to our next speaker, who is Mary Frances Monroe from the IAIS. Mary Frances, over to you.
Thank you very much, Jonathan. And thank you to the ExCo for holding this dialogue. We appreciate the IAIS commitment to continued stakeholder engagement. I'm getting a bit of an echo. The IIF would emphasize three key priorities as those that should be kept top of mind among the many important topics under consideration in various work streams. First, we note that the IAIS strategic objectives include sustainable involvement of the insurance sector in closing a number of protection gaps. I would note that these protection gaps are not just the well-publicized business interruption gaps, but also encompass more generally property and casualty insurance gaps for small and medium-sized enterprises. They also include health insurance gaps, which have been exacerbated by the need for COVID testing and treatment, particularly in certain jurisdictions and for vulnerable groups of people. Also, gaps related to natural catastrophe insurance, the impact of which can be intensified as NatCat events strike vulnerable jurisdictions and groups already affected by COVID. Cyber insurance gaps are also relevant, as noted by our last speaker. And retirement insurance gaps faced by individuals who have lost employment or who've been forced to retire sooner than expected due to adverse health impacts. So we believe that this is an important area of focus for insurance supervisors, and the IIF would like to partner with the IAIS to develop innovative public-private and capital market solutions that address consumer, policyholder, and insurer interests, and recognize that in order to insure some risks at a cost that can be reasonably borne by policyholders, some form of public support or backstop may be required as a last resort. As noted in our April letter to the IAIS and mentioned by a number of speakers today, any solution to insurance protection gaps must not rely on retroactive amendment of insurance contracts to cover risks that were not underwritten, priced, or reserved. We appreciate the IAIS statement on the risks of asking insurers to retroactively amend existing insurance contracts. And we believe that this was a strong statement that properly reflected the need to develop long-term solutions to protection gap issues. The second area we would prioritize is sustainable insurance investment and underwriting. This focus ties very neatly into the focus on closing protection gaps, as solutions can and should be designed to meet protection gap challenges in a manner that is supportive of sustainable and green practices and that contribute to social and economic stability. For example, closing the NatCat protection gap can and should involve solutions that would support practices that lessen the impact of future NatCat events, such as support and incentives for policyholders moving homes and business operations out of coastal flood zones, and support for more resilient rebuilding practices that mitigate future risks. A final area of focus for the IAIS, in our view, should be improving the quality and availability of data. Better quality and more readily available data would support and advance efforts to address protection gaps in a sustainable manner. Data gaps, on the other hand, can be a major contributor to the development of suboptimal solutions to insurance problems. The IIF and its members look forward to working with the IAIS and its members and other stakeholders to address these pressing issues for insurers, their existing and future policyholders, and society at large. Thank you.
Thank you very much, Mary Frances, for those very helpful comments. And lastly, I'm going to pass over to Dennis Noordhoek on behalf of the Geneva Association. And a lot has changed since since the Progress seminar in Zurich. But Dennis, we look forward to the GA's thoughts on this topic.
Indeed. Thank you very much, Jonathan. And thank you for arranging this virtual executive committee dialogue. And of course, for sustaining the engagement with stakeholders, even though we cannot meet in person. Thanks as well for the update to your roadmap and for inviting the Geneva Association to provide input to the next roadmap or work plan. So my comments will actually build a bit on what was said by not least Bernie and the discussion with Hern Shin, as well as something Jutta mentioned just before. So in April this year, the Geneva Association convened an exceptional board meeting at the onset of the COVID-19 crisis. Among the topics discussed were the challenges that they, our board, the insurers, faced in moving to a remote or digital business model. It turns out that many jurisdictions have some kind of regulatory requirement in place that prevents digitalization. The reality is that even in the year 2020, where people conduct or can conduct most of their interactions and transactions virtually, insurers and insurance customers do not always enjoy the same modern luxury. They are hindered by requirements that mandate, for example, wet signatures, paper document delivery, in-person identification of customers, and related requirements. Now, luckily, governments and regulators around the world have relaxed some of those requirements temporarily to accommodate insurers and other businesses. But considering the expected further digitalization and evolving customer expectations, the industry needs to work together with the regulatory and supervisory community to facilitate this transformation on an ongoing basis. Now, to support that discussion, the Geneva Association will be working on a paper on policy and regulatory hurdles to implementing digital business models in insurance. And we'll be exploring barriers to digital insurance business models that have a policy or a regulatory underpinning, culminating in a report on how regulatory frameworks can adapt to and accommodate digital business models. I guess this topic may also be highly relevant for the IAIS roadmap 2021-2022 and potentially beyond. And we would, of course, highly appreciate if those concerns will find their way into your work plan. And I will be very curious to learn more from the ExCo members as to how you view those issues. And just to point a bit into one of the comments from Shin on sort of issues that emerging markets face, my understanding is a lot of those issues with regard to, for example, wet signatures are also faced, in the more advanced jurisdictions or the more mature jurisdictions, so to speak. So considering that, I think it is certainly something worth considering for your work going forward. And thank you very much for the opportunity to bring this up.
Thank you. Thank you, and over to you, Vicky.
Thank you very, very much, Jutta and Marie Frances and Dennis for this input. Now, I'm conscious of the time. We've got 10 minutes. So I suggest I turn over to the vice chairs of ExCo for some quick reflections on what you've just heard and its relevance to our future work plans, starting first alphabetically with David. David Altmaier.
Thank you, Vicky, and thank you to the three stakeholders that have provided their viewpoints on the work plan going forward, and certainly also appreciate the Q&A from parts A and B this morning as well. It's good to hear from everybody and hear what's on your minds as we work through this global pandemic that none of us anticipated dealing with in 2020, but here it is, and deal with it we must. So thank you for your feedback. I'm looking forward to continued engagement, especially coming up at our executive retreats, ExCo retreat in September, and continuing this dialogue and continuing to get input on the work plan. As you've heard today from the various ExCo panelists, the IAIS has already made a number of adjustments to our work plan in light of COVID-19 and the resource strain that has placed on many jurisdictions, including ours here in Florida, as we reprioritize things going forward in 2020. I think one thing that this crisis has done is help us remind us all the importance of the IAIS in terms of why it was established in the first place, and using it as a vehicle for regulatory collaboration and cooperation. We've been holding biweekly calls since March to share data, inputs, feedback, thoughts on how best to respond to this situation. We look forward to continuing this engagement and appreciate all of the feedback so far. I'll leave it at that in the interest of time, Vicky, and look forward to hearing from the other two vice chairs this morning.
Thanks very much, David. And now, Noria Hida, would you like to add?
All right, thank you, Madam Chair, Vicky. This is Noria Hida from Tokyo. Good evening, everyone. Well, thank you very much for the opportunity to listen to your presentations and sharing your thoughts and insights and about the possible changes you see for the insurance sector in light of events in 2020. Now, I'd like to make my remark very succinct. You see, looking toward the September ExCo retreat, where we will discuss the strategic the plan for the 2021 and 2022. The big chunk of my first comment is about the key policy reforms which were adopted in November 2019. Namely, the reference ICS version 2.0 for monitoring period, the ICP and the CONFRAME, and the flexible framework for monitoring systemic risks. What I think is very important for those three is for us to maintain the momentum, commitment, and morale, for us to keep moving forward. Regardless of the COVID-19 situation, we've been working very hard on this, and so that we could deliver as we have agreed and announced to the public. So that's where we prioritize our resource allocation. And the second big chunk, I think this is related to Yuta's comment, the question earlier. COVID-19 crisis made us realize risks as well as opportunities. The COVID-19 crisis renewed the definition and importance of the many issues that had been in large part of our perception from pre-COVID-19 time. As the Ms. Henshin of the MAS mentioned earlier, the technology, the cyber risk, and the cyber resilience gained renewed importance and definition for insurance sector in terms of the policyholders' protection and securing soundness of individual insurance companies, as well as stability of the insurance sector as a whole. So this will be another the area where we would prioritize for the 2021-2022 timeframe. And then also coming back to just partly coming back to Mary's point, this climate, the COVID-19 crisis made us even more aware of the consequences from climate change. The pandemic and the climate changes are both regarded as gray reno. And the COVID-19 crisis and the climate change may appear remote issues. However, as a 2016 report from United Nations Environment Plan stated, the deterioration of wildlife environment may create an environment where the pandemic is more easily to spread. So in that respect, the COVID-19 crisis made us be more even aware of the climate change. So for the amount of time, and let me stop here. And I thank you again for this wonderful opportunity to listen to the colleagues and share my view for such important issues. Thank you, Vicky. Back to you.
Thank you very much, Norio. And last but not least, Suzette Fockensang. Suzette? Are you on mute, Suzette?
Can you hear me now?
Yes, I can hear you now. Yes, clear.
Yeah. Apologies, I was talking to myself. Good afternoon, everybody. I'll be brief. I am aware that I'm standing between you and the end of this session. I think from the emerging markets and developing economies as being the representative thereof, and also from such a jurisdiction, we are very excited about the IAIS shift in their strategic plan to support our needs and what we need to put in place in our jurisdictions. In particular, we are very excited about the practical way in which the IAIS are approaching matters by the development of various application papers supporting the standards, but also the material that's been developed to assist us in dealing with the emerging risks like Fintech, cyber, and climate change. We also, I think on the COVID-19 issues, most of our jurisdictions were behind because we sit mainly on the south part of the world. And with the swift move of the IAIS to put together a survey of regulatory measures that were implemented in various jurisdictions, it assisted us to decide what can work for us or what's been done and how we can also practically apply that in our jurisdictions. I think the data collection, although it wasn't as relevant for all our jurisdictions in the EMDE, but the results does help us in where we can focus on our activities and where our supervisory priorities should lie. I must say we're very excited about the practical approach. On interventions, I think the protection gap issue is particularly relevant for us in the EMDE countries, and an area that we need to focus on. And we also agree with Dennis's point around how to supervise in such a crisis and remotely, which is for some of the jurisdictions weird and not used to. So, yeah, I think on that basis I'll pause here, but thank you very much for giving me an opportunity.
Thank you very much, Suzette. I'm conscious that we just ran out of our allotted time. Just to say from me that I enjoyed very much this dialogue. To some extent, I think we covered a lot of material, and I hope that you got an update of how we're thinking around the issues that you were interested in. I just want to say that we are committed, all of us on ExCo, to find ways to continue the communication and to reaching out to stakeholders. What I've learned today is that, if anything, and this is my personal reflection, I will obviously need to discuss it with the membership, but I think what we are learning is that, if anything, the COVID-19 has amplified some of the issues that we were prioritizing already as part of our strategic pivot. Clearly, that's true for cyber and operational resilience. It is true for digitalization for reasons that we discussed earlier, but it is also true for cyber and operational resilience more generally. Noria spoke about the relationship between the pandemic and the climate risks, and we've also discussed the broad range of protection gaps that, of course, go beyond business interruption insurance, as Mary Frances said. These were all areas that we were hoping to pivot towards, and I think this discussion has showed to me that we are on the right track, of course, resources permitting. And as Noria said, of course, all of that supervisory work needs to be underpinned by robust standards that are implemented robustly, which of course speaks to the COMFRAME and ICP's program. Thank you very, very much. Keep on engaging. Thanks for spending 2 hours with us and for inputting into the process. And I look forward to more engagement in the coming months. Thanks very much, and I hope you have a good summer wherever you are. And I do hope that in 2021 we may be able at some stage to meet also in person. Thanks very much.
Thank you, Vicky, and thank you to everyone from my side as well. Just to say, it would be very helpful to hear how many of the inputs on our strategic priorities are quite consistent with our own internal discussions and further work that we're doing, for instance, on operational resilience, where we've just decided to set up a new working group on these issues, which could include issues around remote working, our further work that we've agreed to do on cyber underwriting. So very good to hear some alignment. One thing I wanted to add is this is not the last opportunity for input on our strategic thinking in September. The stakeholder team here in the Secretariat will be reaching out to all of you through a survey or to obtain any written input that you would like to give to our strategic session in September as well. So look out for that. Thank you, everyone. Thank you to the Secretariat team for putting together such a great event. And thank you for joining us and making this such an interesting and meaningful discussion. Thank you very much, and keep well.
Stay safe, everyone.
Bye, everyone. Thank you.